Hey everyone, welcome back to Corporate Decoder. Today we are diving into Allbirds' quarterly report, and let me tell you, it's a bit like finding out your favourite wool socks have a few holes. We are going to find out how they plan to stay comfy before we start. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below if you want to chat about Allbirds with us. This report shows Allbirds is still trying to find its footing with sales down and some big strategic shifts in motion. We will see if their plan to get back on track is working or if they're still running in place. First things first, this is a Form 10Q, which is a quarterly report that all public companies have to file with the Securities and Exchange Commission, or SEC. Think of it as a school report card, but for grown-up companies. This one is for the quarter that ended in March of 2025. Allbirds had about 5.5 million shares of Class A common stock and around 2.5 million shares of Class B common stock outstanding. These numbers are important for calculating things like earnings per share, which we will get to soon. Every company has risks, and Allbirds is no exception. Let's dive into some of the big ones they have laid out because they could impact everything. It's like weather for the economy. You never know what's going to happen. They might not be able to pull off their strategic transformation plan. Allbirds is trying to change how they do business, including boosting revenue, cutting costs, and forecasting product demand. If they mess this up, it could be a big problem. They need to keep customers happy and attract new ones, otherwise their business goes south. It's retail, you need people buying things. They have been losing money since day one, and they think it will continue for the foreseeable future. Losing money isn't a good business plan. They have to keep their brand strong and not get any bad publicity. They need to protect their image so people will keep buying their stuff. The market is super competitive and some rivals have more money and resources. They could get out-competed. Now let's dive into the numbers. These are the key details from Allbirds' financial statements. This is where we see how well they're actually doing. First, their cash pile has shrunk. Cash and equivalents dropped from about $66.7 million to $39 million. That's a pretty big drop, and it means they're spending more than they're bringing in. Their inventory is also down a bit from $44.1 million to around $42.9 million their stock, hopefully by selling it. Their accumulated deficit is getting bigger and bigger. It grew from $484.5 million to $55 million to $506.4 million. It's like a debt that keeps growing and shows the losses are piling up. Now let's look at their income statement, which tells us about sales and expenses over the last 3 months. Net revenue, that sales is down from $39.3 million. That means they're selling less stuff. Is never the direction you want to be going. These costs have decreased from around $40 million. That's a decent reduction. It means they are finding ways to save money on overhead. However, marketing expense went up from $7.80 million to $12 million. They seem to be spending more to attract customers, which makes sense with sales declining. Their loss per share is also not pretty. It's a loss of $2.73 per share compared to a loss of $3.52 loss of 3.5 share a year ago. Still losing money, but the bleeding isn't as bad. Now we get a look into how Allbirds moved its money around in the last 3 months. Net loss, the company lost $21.9 million, which is still very tough. Depreciation and amortization decreased from $4.8 million. And finally, for the money. Net cash used in operating activities is about $27.9 billion, close to the 26-22 million long run. Allbirds and its subsidiaries are all accounted for together. Basically, it is all or nothing. They have some investments in money market funds and other companies. Nothing too crazy going on here. Allbirds has a credit agreement with JP Chase Bank, but they did not take out any money from it. They have plans to issue more stock in the future for employees and other purposes. Stock dilution decreases the value of existing shares. Allbirds operates as one segment, meaning there's not a clear breakout of specific products or business divisions that are hugely successful. It's all or nothing. The US makes up the majority of their sales. One of Allbirds' directors, Joey Zellinger, set up a trading plan to sell up to 50,000 shares of stock. Okay, so what does all this mean? Allbirds is facing some serious challenges. Sales are down, they are losing money, and they are burning through cash. On the positive side, they are cutting costs, but they are also spending more on marketing to try and turn things around. They seem to be trying to find a sweet spot between innovation, growth, and financial stability. They need to be careful about managing their money, keeping their brand strong and making products that people actually want to buy. The shift to focusing on core products is probably a good move, but they need to execute it well. There's also a lot of uncertainty about the economy and global trade, which could make things even tougher, and they need to protect themselves from cyber attacks and legal problems. All in all, Allbirds is at a crossroads. The next year or so will be critical to see if they can get their act together and turn things around, or if they will continue to struggle. It's a tough call, but the numbers paint a picture of a company facing some serious headwinds. They still have a chance to turn things around, but they need to act fast and make smart decisions. Alright, that's our breakdown of Allbirds' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.